Hey everybody, it is Tuesday the 13th, and the market finished with another new all-time high here, and that shouldn't come as a surprise. We are above a rising 5-day moving average. The market is getting extended from that level, obviously, and from the gap low higher that we saw above that 5-day moving average last week. But we've got the Fed tomorrow. It's the end of the two-day meeting, and they will make their announcement regarding monetary policy. Typically we see a lot of volatility around that event. I think that, it wouldn't surprise me to see some pullback in this market, just given how far extended we are. That doesn't mean it's a short sale, though, because the momentum still remains higher. Instead, I would be looking at the market and saying, what are the potential levels that this market could pull back to? Well, we have the 5-day moving average in the low from this week kind of coming together. The volume weighted average price week to date is pretty much at today's lows here in the S&P 500. So, I think that some pullback wouldn't be a terrible thing. And even if we were to get down to the volume weighted average price from that gap, I think that's about as low as it would likely go. But, we're not here to play guessing games and to make bets, but instead to make calculated risks based on the price action that we see. So we have an event tomorrow that's coming up that will likely cause a lot of volatility in the market. That's what we need to be aware of, and we have to keep an open mind for what's going to happen after that. Just giving where have we come from, though, it seems as though some pullbacks, would definitely be within reason, but it would not do damage. You'd need a real major event to do any damage to this bull market. So any volatility that we do see, maybe it lasts a few days, a week or so, but there's no evidence that that will happen. It's just a scenario to be aware of. The Nasdaq, first thing this morning before the market opened, I had said in the chat room, be on the lookout for the Nasdaq. Nasdaq on watch for a breakout today. We came up to this band of resistance, barely backed off of it yesterday, and still held above that volume weighted average price from the last significant break of intermediate term resistance. And as it held that this morning, it was indicated a little bit higher, but we gapped up, and sure enough, we broke out to all-time highs, as I mentioned in the midday video, as I've been mentioning for the last several months. The consolidations, the range-bound consolidations tend to resolve themselves in the direction of the primary trend. The primary trend is higher, so the market confirmed that today as the Nasdaq broke resistance. And now what we'll be looking for is that potential for the 119 to 119.50 level to become support in here. So this market has gotten a little bit extended as well. So if we pull back down into that level and hold in this general area, that would be a good thing. The other thing to be aware of, as always, when a market that's extended as it is a little bit right now breaks out, we have the possibility that from a failed breakout could come a fast move lower. My feeling is, though, that 119 to 119 and a quarter will hold. But, if things change, we have to be flexible enough as traders to listen to the message of the market, as always. The Russell 2000 is consolidated a little bit here further today. It was, I've got, actually, it's kind of interesting. On TC 2000, it says it was up a penny, and on Real Ticket, it says it was down 3 pennies. Either way, the S&P 5, the Russell 2000 rather, is consolidating a little bit through time. We've got our eye on these volume weighted average price levels, and I think the most relevant one for tomorrow is this volume weighted average price right here. We continue to see that that pattern of higher highs and higher lows was broken right here when it made this lower low. We do still have a rising 5-day moving average. So when we see that break as we saw yesterday, that means just consolidation, caution. You don't want to be pressing longs in this case. But if we can hold above 136 tomorrow, I think that would be bullish for the Russell. If not, then perhaps we see a little bit deeper pullback. Even if it was to get down to this prior peak near 134.5, it would not damage this uptrend. We still have a pattern of higher highs and higher lows on a daily time frame. The semiconductors were up 87 cents today on this daily time frame. You can see this was a new closing high for this group. So, people rush to get bearish on, on a breakdown like that. I clearly expressed caution and lack of belief that it would, continue to rally. I was looking for it to pull back in here. The point is, though, that while I was looking for it to pull back, and most of the time when you have a declining 5-day moving average, that is what you get. It's not what you always get. There are no always in the market. There are most times, and what we want to do is be involved with the most times. We're looking to trade on probabilities, profitably on probabilities. We saw the pullback to the rising 5-day moving average yesterday, and today we bounced from that level. So it's one thing to look for a pullback and say, okay, I'm going to wait and defer purchases. But what we don't do is we don't look to sell short just because we may not believe that this rally, should hold over here. I think that, the volume weighted average price from that event will be important going forward. But, any pullback from here, I think you're going to see most likely will hold, near the low that we saw this week. The biotechs did recover a little bit today, but you can barely call that a recovery just because it was up $1.61. If you're a scalper, maybe you made some money on it, but most of that range was gobbled up by the gap anyways. We are above a 5-day moving average. The 5-day moving average is still declining. Tomorrow, that will change. When we get rid of this data, if we remain, let's say we remain above the 5-day moving average at this point, well, tomorrow that 5-day moving average will begin to rise. Just because we might see it rising, though, we don't want to buy above this level, for instance, because we have that potential level of resistance up in here that is further, possibly fortified by this declining trend line here, and the fact again that we are still below the volume weighted average price for the year, and this is truly, the garbage of the year is the biotechs. And finally, Apple did add to its gains here. I was expecting or hoping that we would see some further consolidation. Buyers came in and supported this stock. I still think that over the next couple days, what we'll want to see is more likely is a pullback down towards this level. If that can hold as support, then I think you can start to make a good case for a bullish scenario with Apple continuing to go forward.